Welcome, everybody. My name is Corry Riley, and you are here today with Tax Talk with Corry. I hope that we have some new people here today. By looking at the list that keeps coming in, it looks like there are a bunch of new people. Many of you then don't know what this is and how this operates. So let me just take a quick moment to explain that this is not a normal webinar. A normal webinar means that I talk for an hour and I leave a little bit of time at the end for you to ask questions. The way this is actually going to work, and I should say, if you can't hear me, make sure you put something in the chat to let me know you can't hear me. But the way this works is I'm going to spend about 15 minutes talking about a specific subject. And the subject today is talking about retaining your records. After that, for about the next 45 minutes until 12 o'clock, I'm going to open up the floor for you to ask any tax-related questions that you have. You have the opportunity to use the chat to type your question into it, or also I'm going to give you the opportunity to unmute yourself. And when you unmute yourself, you can ask your question live. Either one works just fine. Now, I understand that some of you are not going to have any questions and you're here to learn and listen to other people's questions and answers. That is wonderful as well. You'll learn a lot of information just by listening to other people. And of course, I know some of you are shy and you don't want to ask your question either. So just sit back, relax, listen to people's questions and listen to the answers. Now, if this doesn't sound like something you're interested in doing, that's fine. Go ahead and jump off and go back to work if you so desire. However, I normally do have people that come back month after month to find out, what other people's questions and answers are. And often they don't have any questions whatsoever, and that's fine. So if you don't have any questions at some point in time, maybe you could use the chat button on Zoom and let me know that you don't have any questions. Not saying that not saying I'll promise that I'll see it, but I do try to look at it before I ask the next question. And when I ask questions, I try to go through a kind of a first come, first serve for those that jumped on before the training started. After that, like right now, I'm not keeping track of the list. So after that, then I just kind of go down through the list and see who has questions. And again, I look at the chat all the time. So if I have a period of silence and somebody's not unmuting themselves to ask a question, then I kind of look over at the chat to see if there's a question that can fill in that little bit of silent time. So let me first tell you really quickly about the SBDC in case you're not too aware of the SBDC. The SBDC is a nationwide program. There are multiple centers around the state of Pennsylvania. So there's a business consultant in every county of Pennsylvania, as well as across the nation. So I'm assuming none of you are in a different state, but if you have any friends or family or acquaintances that are looking to start a business or already in operation, then there is an SBDC near them across the country as well. The SBDC is a service that's offered to you at no charge. We offer startup assistance for those of you looking to start a business, and we offer assistance to existing businesses, general business consulting, making sure you're on the right track, talking about bookkeeping and accounting and record keeping, talking about marketing, human resources, international sales, government sales, agriculture, inventions of new products, how to form an LLC, all of these different things the SBDC can offer assistance with at no charge. I myself, I am from PennWest Clarion SBDC, which is on the central western side of Pennsylvania. I've been with the SBDC for almost 20 years. I am an accountant by trade, so I love to talk about taxes and I love to talk about accounting. But I do also have a wide array of experience in all of the other, things that I touched upon that the SBDC offers. And where I don't have an expertise, I can rely on my coworkers either here at PennWest Clarion or at another SBDC across the state of Pennsylvania or across the nation. Everything that we learn from you also is confidential, so take that into account as well. We take that to be really, really important for us. We're not going to go out on the street and start talking about you to your competitors. Okay, let me get started now because you're not here to learn about me. You're here to talk about taxes of some sort, or even any kind of general business related questions. I'm more than glad to try to answer. First off, we need to talk about record retention. As for your tax returns and your receipts, how long do you hang on to that stuff for? So the general rule, and this is according to the IRS, the general rule is 3 years that you want to retain your records. Now, they would tell you that if you have fixed assets, which a business will most likely have, then you're probably best to hang on to the receipts and the tax records for as long as you own that fixed asset and beyond that period of time and it's because I said as long as you own it, because at some point you're either going to sell it or throw it away, and therefore you may need to go back in time to look at those records. So as long as you own that asset, and until you show the sale or the throwing away of that asset, they suggest that you keep the records that long. Now, I would say this. I mean, maybe the receipts, okay, maybe, but even I wouldn't probably keep them that long unless you are paperless. Like I am paperless. I scan in all of my receipts and I save them in the Dropbox. So yeah, they're going to be there like forever, right? But as for the paper receipts, I don't have those anymore. And then we move on to saying like, do I need to keep all those tax returns? Again, it's suggested according to them. My real world experience, I'd say don't worry about that because as long as you're having your tax returns done each year, then there is what we call a depreciation schedule or an amortization schedule. And those keep track of the date you bought the asset. This is on your tax return. Your accountant does this with you. It keeps track of the date you bought the asset, a description of that asset, and how you wrote that asset off over a number of years. Whether you took, and you may not know what I'm talking about here, but whether they took Section 179 deduction or bonus depreciation or regular depreciation, they track all of that on a document called the depreciation schedule. So I don't think there's any reason to have to really go back 39 years for a building, or 15 years, or even 10 years for certain assets, because you have record within your tax return and your accountant will always have that. Now, when I do say the 3 years, it's from the date that you filed that return, 3 years after you filed that return. If you amend your return, that's why you want to make sure you keep copies of the original for those at least 3 years, because you can go back and amend 3 years back of tax returns. And so if you're going to amend the return, now you better keep that for another 3 years as well. So you better keep the original, which is going to kind of turn out to be 6 years, and then keep the amendment for another 3 years. Okay. If you're doing anything fraudulent, which I mean, in my mind, I'm like, well, who's going to do it fraudulently? But if you are lying on your tax return and you know you're lying on your tax return, that means you're filing a fraudulent tax return. The government can seriously go back as far back as they want to audit fraudulent tax returns. So you better keep your receipts and your tax returns forever if you're filing a fraudulent tax return. You will hear people talking about 7 years and 10 years. 7 years, there is a rule for 7 years that if you're filing a claim for worthless securities, or, and this one may sound more familiar to you, bad debt deduction. If you're filing a bad debt deduction, then you need to keep your records for 7 years. So, to summarize, what I would suggest is probably maybe 10 years. Keep your stuff maybe 10 years just to kind of be safe, and then start disposing of them after 10 years. Again, really only 3 years is required. And not even required, but you better have them, right? If you get audited, because that's kind of their look back period is 3 years. But if you kept them for just say 10 years, but don't keep them for 15, 20, and so forth, unless you're fraudulently filing a tax return, then you may want to do that. Again, if you're paperless, if you're not paperless, you really should become. It's like the awesome thing to do is either Dropbox or Google Drive or OneDrive. You want to have some sort of online storage system. The thing I like about Dropbox and like OneDrive is it saves it to your computer as well. You can have it save it on your computer. So not only do I back stuff up into the cloud via Dropbox, but it's saved on multiple computers that I use. And then also, it's probably even a better thing to back it up to an external hard drive once in a while, like say once a month. Back it up to a flash drive or a little larger type of flash drive called an external hard drive. And when you back it up to those things, disconnect it from the internet. So that means disconnect it from your computer, so that should your computer get hacked, then you have a very strong backup, okay, that won't be corrupted. Whereas with any of those, OneDrive, Google Drive, and Dropbox and such, if you get a virus into your computer, it could logically go out into the cloud and destroy everything that's out there too. Okay. So now you might say, well, I'm going to keep all my paper copies. Well, you can do that. It takes up a lot of space depending on how many receipts and such that you have. So that's a choice that you have to make. Again, I keep no receipts whatsoever. I scan everything in. My tax returns are scanned in. Everything absolutely possible is scanned in or saved, and it's put in the Dropbox, and then I back it up periodically, like I said, externally, and therefore I don't have to worry about storage at all. Okay, so that is about all I have to say. Now, you might have more specific questions about retaining your tax records, and you'll have this opportunity over the next roughly 45 minutes. But also, if you have any other tax-related questions, I'm more than glad to try to answer it. And or if you have any other type of business related question, then feel free to ask those questions as well, because I am a general business consultant. I can normally answer a lot of questions. One little side note that I want to make sure I disclose to you, and you would have seen it when you signed up for this training, is any tax advice that reflects our professional judgment based on our understanding of the facts provided to us and on current tax law and on my knowledge. The SBDC is not responsible for misinformation, as this is a service offered at no charge to entrepreneurs and business owners. So again, when you registered, you could have read that if you so desired as well. So I'm doing the best I can. I do have accounting background. Of about 20 years as well. So I'm bringing a lot of knowledge to the table today, and I'll do my best at answering your questions. Okay, so the first person I'm going to ask a question of, I actually see that she put it in the chat here. So Marin Hook says, my question is about sales tax. See how it can be different than what we talked about right now? I am a new business about to launch in January. Congratulations. I have obtained a sales tax license from the Pennsylvania Department of Revenue. I recently registered as a dealer with a seller who required that I complete a Pennsylvania exemption certificate revenue form revenue 1220 in order to buy their products. I have ticked box 3. Property will be resold under account ID. Can you explain the ins and outs of sales tax and the Rev 1220 form? Think how it works is that I don't pay sales tax to my seller. Sorry, trying to read this and keep it going here. So I think how it works is that I don't pay sales tax to my seller, although I do charge sales tax to my buyers. Do I always need to charge sales tax to buyers of these products? If I sell in Pennsylvania, I think I understand the rate to charge 6%. But what if the goods cross state boundaries? How does local tax work in Allegheny County or sold via the internet? Great question. And I'll try to wrap this up as small as I can. But do watch out for upcoming webinars because PennWest, Clarion, SBDC has a close relationship with the Pennsylvania Department of Revenue. Not that we report anything to them. Everything's confidential, but we offer training with them where they teach the training and we offer it to everybody in the world. And about every month, I think we have a different Pennsylvania Department of Revenue webinar, and sales tax is definitely one of those. So and it's free, so you want to attend. But let me wrap it up. So if you are a reseller of a taxable product, when you buy it from your supplier, you give them a sales tax exemption form because you are not the end user. Only the end user pays the sales tax on a sales taxable product. So if you're reselling it, you don't pay sales tax. And if you're a manufacturer and you're buying all these pieces of raw material to make a finished product, well, once you're done making that finished product, you're going to resell it to another seller, a buyer who's going to sell it. And therefore, you don't pay sales tax on anything either. Now, if you are a manufacturer and you're going to make something and then you're going to retail sell it right then and there to the end user, oh yeah, now you're going to might have to start, well, no, and you're going to retail or sell it. Yeah, when you still buy it buy the parts and the raw material, you're not paying sales tax because you're going to sell it to the end user. That's who's going to pay the sales tax. So in your question, the people buying it from you, if they are considered the end user, then yes, you charge them sales tax. But if you're selling it to another company who's then going to turn around and resell it right away, then you don't charge sales tax. However, they have to give you their sales tax exemption form. If you do not receive a sales tax exemption form by law, you have to collect sales tax. Even if they tell you they're sales tax exempt, if they don't give you a form, you have to charge sales tax, because if you get audited, you get in trouble for not collecting the sales tax. You can use an excuse like, "Oh, I didn't know." Well, the way the rules have always worked with our state police officers that pull us over is ignorance of the law is not an excuse, okay? And I have seen that happen with small businesses. Um, uh, um, so with that form also, you might get a nonprofit that comes to you and says, "Hey, we're sales tax exempt. Don't charge us sales tax." You got to get the sales tax exemption form. I don't care if they tell you something or not. If you don't have the form, you charge them sales tax. Now, once you get the form, you could put it in your file and find a way to keep record of it so that when the next person comes in and says, "Hey, I'm with XYZ company and I need to buy this from you and it's going to be sales tax exempt," you can look it up in your database to verify that organization, that you already received a form from them. Okay. So the 6% tax is flat across the board. That is our state sales tax. However, when you are in Allegheny County, I do believe that there is an additional sales tax to be collected for Allegheny County. And I'm out in rural Pennsylvania, so I don't deal with Allegheny County. And also, Philadelphia has its own sales tax, I do believe, and therefore, I'm pretty sure you just go ahead and collect whatever the sales tax is, 6% plus the Allegheny sales tax, or 6% plus the Philadelphia sales tax. And then you pay all of that to Pennsylvania through their website called MyPath. That's where you file your sales tax along with other Pennsylvania taxes. And then from my understanding, although I'd have to look this up to get your answer, so you might want to talk to your local SBDC consultant and ask them to make sure. But I believe you pay it to Pennsylvania through MyPath, and then Pennsylvania will distribute the Allegheny County sales tax to Allegheny County and Philadelphia to Philadelphia. Okay. Crossing state boundaries. So yeah, there are rules on that, and you better be working with an accountant when it comes to this, because selling stuff across state boundaries can get complicated, especially if you're selling a lot of stuff on the internet. But ultimately, the way it works is if you're selling something to somebody in another state, then their rule is probably the same as Pennsylvania, which is because they're out of state, you don't collect sales tax either for Pennsylvania or for their state. Because there's another law called use tax. Use tax is when, let's say for Pennsylvania, let's say us, okay, we're buying something from another state, okay, they're not going to charge us sales tax, but we are the end user, okay? Just assume that I am the end user of what I'm buying from another state. When I bring it into Pennsylvania, it's considered being used by me now. And so there's what they call the use tax law, which is 6% as well. And the form you file for that is the PA1 form. Or if you are an organization that has to pay sales tax on MyPath website, then as you're paying your sales tax to MyPath, you can also pay any use tax of stuff that you bought from another state and use it in Pennsylvania. You can pay your use tax at the same exact time. And again, that's 6%. So most states have a use tax law. Therefore, if you're selling something to somebody out of state, you don't charge them sales tax. They have to take care of themselves over there. Okay. Now there are additional rules for every state across the country as to if you sell so much of your product into another state, if you go over a certain threshold, then you actually do have to start collecting sales tax. Take, for example, just over the border in Ohio, there is a store called Summit Racing. If you ever heard of Summit Racing on the way over in Ohio, they didn't used to have to collect sales tax when they sold stuff into Pennsylvania online, but now they're over that threshold, whatever dollar amount that is for the state of Pennsylvania, and now they do have to collect sales tax. For you women, you probably have heard of Oriental Trading, and Oriental Trading didn't have to collect sales tax previously, but with the law as it changed, now when they sell stuff to us here in Pennsylvania, they have to collect sales tax. And then, of course, get a little more pickier. If you have physical locations in any particular state, whatever state you're physically also located in, you do have to collect sales tax in there. So take, for example, Walmart, which is out of what, like Arkansas, right? But because they have a physical location in Pennsylvania that they're selling stuff from, they have to collect it as well. Okay. I think that answers a lot of your questions. I'm going to move on. If you have more, if we get back around to you, we can talk some more about it. Otherwise, all of you, make sure you reach out to your local SBDC consultant wherever you're located in Pennsylvania. They should be able to answer a lot of these questions too. But if they can't answer the question, then feel free to reach out to me as well. And I'm going to put my email in the chat that you can reach out to me. But I may very well try to turn you and flip you back to your consultant. But if you would come back and say, hey, my consultant said that they didn't have these answers for me, and you say, well, okay, I'll reach out to Corey over at the other SBDC, they'll have no problem with that. Okay, next up is, if I pronounce it right, if I don't, I do apologize, but and then maybe I typed it wrong too, but Devian Harris. Okay, I see right here you put in the chat as well. So I have a new HR consulting business. We just started, so we are pre-revenue. I also need a new laptop. For tax purposes, is it better to purchase a laptop this year and write it off with zero revenue, or is it better to wait until we have revenue to write the laptop purchase off to offset taxes on that revenue? So there's a lot of questions that I'd be asking for this, okay? If you're a one-person owner, and if you're, say, maybe an LLC or a sole proprietorship, it's therefore going to go onto your personal tax return. So it could be a benefit that you write off the purchase of a laptop with no revenue this year, because what would happen is the loss on your business would subtract away from your other income on your tax return, on your personal tax return. If you're married, it goes all together. If you have kids, it all goes together. And so it may give you a bigger refund this year. With that said, though, if you see that, if you believe that next year that sales are going to end up getting higher and you're going to need expenses next year, then it would make a lot of sense to wait to buy the computer in January, and to bring down your taxes due for 2025. So I can see it both ways. Now, if in your mind you're thinking I'm not really going to generate revenue until 2026, then again, I'd probably be like, well, then wait to buy the computer later. Okay. But if you're going to have revenue in 2025, then it would be my suggestion, to talk to your accountant and maybe ask them what they think, or go off of what I just told you. Okay. If I had to lean on one side or the other, I'm hoping and assuming you're going to make money, lots of money in 2025. So I'd probably say, it's the end of December, just wait till January and buy a new laptop at that time. That's probably what I would suggest. Okay. Dan, let me see if there's a chat in here for Dan. Yes. Okay. Dan says, I own and run a junk removal business in Pennsylvania. I heard some states pay sales tax on services, but I thought services you don't. Okay. So as for your particular business, I don't know the answer to that one. As to answer the general question, are some services in Pennsylvania taxable? Yes, some services in Pennsylvania are taxable, to where you do charge sales tax. Normally, the services that charge sales tax are services that have a retail side to it. So you go to a beauty salon and you you're getting your hair washed and cut and permed and everything. Maybe not you, Dan, but someone else, right? And so they're using shampoo and they're using gel and mousse and stuff. So they're using like a retail type of product. Therefore, that entire service is sales taxable. Now, Dan, you probably relate to this. You go to an auto mechanic shop and you're getting your oil changed. It's a service, but also there's oil and filters involved. Those are retail type of products. So when they charge you for that oil change, they're going to charge you sales tax. That's the way the law is. But then I can get a little more complicated and I can say, look at a general contractor, somebody that does electrical work or plumbing, HVAC, renovates houses, builds houses. Okay. They're all weird on their own. Okay. But they're not weird. It's Pennsylvania that's weird for some reason. Right. So, what happens with them, because they're a service, but they're also using like retail type of products, right? What happens with them though, when they go to their building supply store to buy wood and such, they pay sales tax right there at the building supply store. And then they go and they build a house or renovate a house for me. And when they give me the bill to build that house, I don't see sales tax on there anywhere. Now, it's built into what they're charging me because they want to make sure they get reimbursed for the wood, which also included the sales tax. They want to get reimbursed for all of their expenses, but they don't have to charge sales tax on their labor. And they're not breaking out sales tax in any way, shape, or form. I don't really know the reason for that. That's just the way it works. So, with that said, my summary for you is, when it comes to a junk removal business, I would reach out to your local business consultant and I would ask them that question, whether they're supposed to charge you sales tax or not. And they may have to do some research. They're probably not going to know the answer, especially if I don't know it. They're probably not going to know it either. But we can definitely do that research for you at the SBDC, local to you, and get you that answer. If I had to guess, okay, I'm going to say junk removal is not sales taxable in Pennsylvania. However, that's just my guess. Okay. Jennifer, let me see if there's a chat by Jennifer. Again, I'll try to get through these as quickly as possible for everybody. So hopefully everyone has a chance to ask. Okay, Jennifer, if you're able to unmute yourself, I do not see a chat in here. And Jennifer Polhemus.
Hi, Corey. This is Jennifer.
Yes, how you doing, Jennifer?
Hey, I'm wonderful. How are you?
Doing good, doing good. What's your question today?
Well, I have so many that I don't even, I don't even know what to ask.
Okay, and
I
that's
mean, everything is brand new. I think the thing I can see most clearly is that I need to get an accountant to ask questions specific to my business. But I don't even know how to go about finding a reliable accountant. Don't even know how to do that.
okay. And that's a good question right there, is how do I find an accountant? Um, some people will say, and especially you'll even hear SBDC consultants say this, go get a CPA, certified public accountant. Yes and no. Okay. I'm an accountant by trade. That's like my experience, not a CPA. I put myself up against most CPAs out there with knowledge knowledge and experience. Um, uh, the difference between a CPA and a non-CPA, CPA is more expensive than a non-CPA normally. Normally, they both could have the same level of education. They went to school for accounting and they got a master's degree, maybe, and they continued their education throughout their life to stay up with all the rules and changes. Um, they both can file your tax returns and they both use professional programs. They both better have good reputations, otherwise, they're not going to stick around in business very long. Two big differences between a CPA and non-CPA, but it probably doesn't affect you, especially if you're a for-profit business, is a CPA can audit government entities and can do audits of nonprofit entities. Now, if you're neither one of them, you don't need to worry about that. Also, they can do some bigger things like compilations, things like that. Those are for like pretty big companies. I mean, I'm talking like publicly. What's the word? They have stock out there in the public, right? Like Walmart. Okay, you can buy stocks. So if you have stocks out there in the stock market, you probably want a CPA for things like that. But a non-CPA can normally take care of a small business tax return, no problem at all. Um, Now you do have to watch out, and I do apologize if any of you work for like an H&R Block, or whatever those other big box companies are that do taxes. Those are normally non-CPAs, but very expensive still. And then you have EAs, which are called enrolled agents. You'll see like EA at the end of their name sometimes. Um, they're probably going to be on the more expensive side as well. And then you're just going to basically have an accountant that didn't get any type of certification like that. Their prices are probably going to be lower. Okay. You have to decide which way you want to go. I'm kind of telling you across the board, and I'm kind of trying to tell you that they're all equal. Okay. If they've stayed up with their knowledge, if they have the education, and they've stayed up with professional development education every year, then they're all equal when it comes to small business taxes and doing personal taxes. So if you have somebody doing your personal taxes right now, there's a high chance that they can do your business taxes also. Ask them, do you have business tax experience? If you're an LLC, ask them if they do LLC tax returns. If you're an S corporation, ask them if they do S corporation tax returns. Partnership, nonprofit, nonprofit. See what their experience is, and ask around. Ask your family and your friends who they go to for their business taxes or personal taxes, and that's normally how you find a good accountant is by through referrals. Okay. Because trust me, anytime we're unhappy about somebody, we're always going to complain. And if you get one unhappy review from a friend or family member, it's probably good to keep asking people, right? Because how often have you went to a restaurant and you got a bad meal that day? Okay. My mom different times will say, I'm not going back there to eat. I got bad this or bad that. And I'm like, Mom, really? you've been there 500 times before that, and you complain one time that you're not going to go back, so she'll go back. Okay. And it's the same thing I say with every other business. If you're a business owner, I promise you people are going to complain about you, but I hope that it's a rarity rather than something that's common. Otherwise you won't be in business for very long. Hope that helped out. And I'm, of course, more than glad to talk about it more, but that gives you an idea. Philip Burns here says, I have had a referral for tax professional from SBDC. So yeah, I'm not sure exactly that, but yeah, you probably need to find an accountant to do your taxes. All of you should if you're just starting a business. So let me see if Philip had any other questions here. I wish there was a way of me eliminating. Maybe there is, and I don't know. I haven't looked into how to delete the messages after I read them. So I kind of have to scroll down through them all here. Okay, no more from Philip. Okay, so and I apologize. I'll probably mess up your name, and I'm really truly sorry. Niska. I'm gonna look for your name right now. Okay, right there. I am starting an e-commerce website. Are there systems or software that calculates the correct percentages to charge based on user location? So we're probably talking about sales tax, it sounds like. We're kind of sticking on that, but we can go in any direction. Are there systems or software that calculates the correct sales tax? So yeah, I'm not a professional with the e-commerce side of it, so but we do have SBDC consultants throughout Pennsylvania that do really know this. So if you work with your local SBDC, if they don't have that expertise, they should know about the other SBDCs that do have that expertise to assist you with that. But yes, when you build a website, then there you can build into that website the workings in the background that will be able to, it'll be programmed in so that no matter based on the address of the buyer, it will know what the sales tax is to charge your customer. I mean, you think about it, I know you're probably looking for a specific answer, but I'm not going to have that today. But we all know that, you buy something from Walmart, they will know every state across the country how much they're supposed to charge for sales tax, but I don't know that off the top of my head. So reach out to your local SBDC consultant on that. Sorry for not being able to answer that one. Okay, the next one here. Sometimes I type these really quickly when we were just starting, but Farhad, Farhad. I'm going to quickly look for your name. Right there it is. If I had a business expense as proven by a bank statement, but I couldn't find the receipt, does that still count as an expense and get a tax deduction? What are the risks? So if it's a rarity that this happens, I say, yeah, go ahead and claim it as an expense if you don't have the receipt. Of course, there's always exceptions. So now I'm thinking, if it's a large purchase like $5,000, you better get the receipt, okay, rather than just using your bank statement. But if it's something small, I'm okay saying probably no receipt necessary if this is not happening often. So what are the risks? Yeah, because if this is happening all the time, or if it's a large dollar amount, if you get audited, then they're going to question it as well. And they're going to say, why is this happening all the time? And if it's happening all the time, I'm going to tell you right now, I ain't going to believe you. And if I'm not going to believe you, the auditor is not going to believe you. Or if it's a large purchase, like, $1,000, $5,000, $10,000, and you don't have a receipt for that, probably going to question that as well. And why would I question it? Because maybe it's a personal purchase, or maybe you're doing something illegal. You're what's the word? I'm not thinking of the word. You're funneling money through, okay, that you're not supposed to be funneling through your business. So I think you get the gist. Once in a while, it's totally okay. There's times where I go and I bought something from a local retail store, or I was out of town and I went to a Sam's Club and I bought something at a Sam's Club, and then I misplaced that receipt, but it wasn't an extravagant dollar amount, but I know what it was in my head. I'll still expense it because it doesn't happen very often for me. Okay. Good questions. These are all great questions. The next one here. I'm going to look for Wexy Schwab. Let me see if there's anything in the chat. And I'm not seeing anything. And are you still? Yep, you're still with me. So if you have a question, you can unmute yourself. Go ahead and unmute yourself. Wexy Schwab. Okay, and in the meantime, sometimes people have a hard time, getting to it or something. So I'll move on to Melissa Dupree. I'm looking for a chat from Melissa. I applaud you, y'all doing, Melissa Dupree. You're using the chat a lot. Sometimes, some months I don't have anyone using the chat. Okay, Melissa Dupree, you're here with me still, it looks like. So if you want to unmute yourself, go right ahead and unmute yourself. Ask a question.
So I'm just here really to learn everything. I'm very like brand new at this and at the beginning stages of an e-commerce business. So I'm kind of just listening in. I don't really have a question yet, but thank you.
Absolutely, that's good. Okay, and just while I'm thinking about it, this is being recorded, so this will be on our YouTube. We don't advertise it and things like that. However, if you go to YouTube and do a search for like PennWest SBDC or PennWest Clarion SBDC, you should be able to find us. And then there should be a playlist in there for Tax Talk with Corry. There's not a lot in there because I kept forgetting to click record. So they set it up so that it just automatically records now, so I don't forget. Okay, so I got through the list that I had. So I'm going to take a look at some of the chat here since a lot of people have been using chat. It looks like Morgan is asking. I am an artist who sells products at art markets and online. I've been doing my Schedule C every year, but I haven't gotten a sales tax license or LLC yet. What order would you recommend getting sales tax license or LLC? I know it's hard to change your name on an LLC, but what about for my sales tax license? Um, so So you probably already have a business name and you're wanting to form an LLC. That's where I'm going first. So that's what you want to do first. You want to form your LLC. Now, if you already have that name, you got to get it changed over to the LLC. Really not that hard. There is a form that you fill out that transfers the ownership from you as an individual to your LLC. So that's actually kind of easy. Once your LLC is formed, then you want to obtain your sales tax license. And you're saying here that you have not, no, you haven't done sales tax yet. So you don't need to worry about transitioning anything there. Okay. So form your LLC, transition the name into that LLC. You got to have LLC at the end of the name now. And then after you get your LLC, then you obtain your sales tax license. Okay, LLC comes first. You'll also get an EIN number at that time too. So you want to make sure you get an EIN if you haven't already. Well, and if you do have a sole proprietor EIN, you'll have to get a different EIN, I'm almost sure, when you form your LLC. Okay, so get the LLC formed first. So you get your EIN, you get your business name all set up, then you move on to sales tax. Now you might be lost as to how do I do that? You can either go to an attorney, you can do it online through paid websites such as LegalZoom or Rocket Lawyer. You can absolutely do it your complete self, I won't say every SBDC consultant has this, but I know I do. I could send it to you later. I have a video and a kind of a little paragraph that talks about how to form an LLC and how to get your sales tax numbers and that. And you can totally do it yourself on Pennsylvania's website. Or if you work with your local SBDC, we can give you a referral to what we call the Penn State Law Clinic. That's a short name for the Penn State University Entrepreneur Assistance Center, I believe. But for short, we call it the Law Clinic. And that is where there are law professors, they're attorneys, that have law students, and they're giving the law students real world experience by forming LLCs and sales tax and doing exactly what you're asking for. And they can do that for you. So I do believe I heard that starting in January, because they are becoming so popular and they're having to take on more expenses to stay in operation, that there will be a $100 fee to utilize Penn State Law Clinic's assistance. However, that is really cheap compared to an attorney, which I'm not trying to take business away from an attorney, but a really small, I'm assuming, please don't be offended, a really small artist, okay, that's just starting out, is not made of money. That if we can find a way to do it at a lower cost, we're going to do it. And then if an attorney is ever needed for a bigger project, hopefully we're in operation making lots of money and we can afford an attorney at that time. Okay, good question. Let me see another one here. Oops. Okay, Catherine Gaffney says, do you have a system for scanning receipts one at a time? Get out of my way here. This is something monthly, one at a time, comma, monthly, multiple records on one document. I also have a question easier to ask by voice rather than chat. Okay, so just a minute there. Okay, so like Dropbox, you can create folders. It's just like files on your computer. You can create folders, and then you have Dropbox on your phone, and I can then go to the folder where I want to save this document, and then I can click on my phone. I can click scan, and you hold it over the receipt and it'll automatically scan the receipt, and then I can rename it on my phone before I click like save, and it saves it as a PDF on in Dropbox. It's not like physically on my phone. It doesn't take up space on my phone. If I do it through Dropbox, it just saves it up into the cloud, which then can't think of the word, connects it with any other computer that has Dropbox on it. Okay, it just automatically does that. So I'm assuming that Google Drive and OneDrive does that as well. So I would suggest that. And then if you're not using your phone because you have a lot of receipts and things, then just make sure you buy a copier that has the scanning ability, basically an all-in-one. Okay, we'll do scanning, and I like a printer, even if it's a smaller printer. I like a printer that has a feeder to it, so that I can put in a group of documents, such as all those insurance papers you get for your liability insurance. You can put them all in the feeder, and it just feeds it through automatically scanning it. Okay. But then your question is multiple records on one document. I'm not a fan of putting multiple receipts into one scanned document. I want each receipt to be separate. Now, so you may be thinking, well, if I wanted to get rid of all these receipts from the past, that's a lot of work. It is a lot of work, and maybe in that case, maybe going backwards, maybe you do group scans, but at least from this day forward, do all individual receipts, and then you get to save them. You date them, whatever the receipt of the date is. I go like 2024-12-18 space, and then the store that I purchased it from. And then if you want to put a really brief 1 or 2 word description of what you bought, but if you don't want that, that's fine. At least the date and the and the company you bought it from is very important. Okay, so Catherine Gaffney, if you want to unmute yourself, you can ask your question.
Thank you. Yeah, that was super helpful. Yeah, I was thinking about the scanner that I have and just putting them all on the copy machine and going. So I will utilize that feedback. I am a musician, artist, so I have a lot of just starting to finally get everything organized and start tracking everything. I've been doing this for 20 years. It's taken a little while, but I'm really trying to treat it like a business. Therefore, there's a lot of expenses, more expenses than income at this point. I'm trying to build more income streams. I guess my question is, what kind of and also somebody else mentioned like the home office stuff, like what kind of expenses, my fuel. I don't take a receipt of when I fill up my car with gas, but I do the fuel the mileage? Is that the way to track fuel costs? And like, just kind of, can you touch on like the travel expenses and what should I put in as an expense, or should I not put as much in? Because it's going to be a huge loss, I feel like, at the end of the year until I start building up more income streams or revenue streams.
Right. Right. Okay. Well, I do want to say, I'm going to start with the loss side of it. If you foresee that that you're just not generating enough income to cover your expenses year after year for multiple years, then you do want to be careful of what you're writing off. I mean, ultimately, the government says if you have an expense, you have to write it off. I just kind of think the gray area is if you don't really have the big expense, then don't worry about it. Um, uh, the reason I talk about the loss is because if you're showing a loss 3 out of 5 years, consecutive years, then the government could come back and declare you a hobby business. And if
Mm.
you're a hobby business, that means that you don't get to write off expenses, then you just have to claim the income. So if you don't foresee your business really growing and you're kind of just doing it as a hobby, it's probably best to just stick with maybe claiming the income, or depending on how they're paying you, do what you want there, okay, with how they're paying you for whether you do taxes or not. With that said, travel expenses. Um, Mileage is normally the easiest way to do it. You don't have to necessarily have a book in your glove box anymore. There are apps on your phone that will track everywhere you go, and then you can go into that app and you can mark personal business, personal business, personal business as you go down through there, and it'll track your mileage. If you don't want to use an app like that, then you just kind of keep track of where you did travel from, and you can go into MapQuest, or I use Google Maps. I hate MapQuest actually, so scratch that. Google Maps, and put in, you left from here and you went there and then you went back, and that was all business. You need to keep track of the date, where you went to, who you met with if you traveled there, or if you went to buy supplies from a music supply store or something. Where did you go? Who did you meet with, and why did you meet with them? So there's a little bit of information: the who, what, when, where, why. You kind of
Hmm.
need to keep track of that information in case you do get audited. And the state of Pennsylvania does like to audit mileage expenses. Now, some people will say, well, I want to track actual expenses. And you can do that, but you still have to track mileage, because the thing is anytime you're driving your own vehicle, there's going to be some personal and there's going to be some business. That's the way it works, is if you're driving your own vehicle. And so if you're going to take actual expenses, well, you can't take every time you fill up your gas tank. You can't take the expense of brand new tires, because some of the tire was used for personal purposes. So you still have to track mileage. And then based on the percentage of business versus personal use, you'll get a percentage write-off of your gas and your brake pads and your tires and your windshield wipers and your car washes. Um, um, if you're driving a gas hog, like a pickup truck or a Suburban, or something big like that, then yes, sometimes it is better to take actual expenses. So when I see a building contractor, they're driving trucks around. So a lot of times that will be better to take an actual expense instead of the mileage. But most of us driving cars and driving sport utilities and crossovers, you're just easier and better to take the mileage expense.
Cool. Yeah, I've been doing the tracking, like you said, with the maps. Do you know anything about I found a way, it's called Wave. It's an accounting like app online. So I've finally been starting to use that. Do you recommend that, or you know anything about it? I've just at least been tracking my income and expenses, and can they audit from there? Like I've been putting everything in, all the cash I make, just so it's all in one place. Because
Right.
I do intend to be making, money at some point. So it's not going to be a hobby forever.
Right, right, absolutely. Um, okay. Oh, Wave. Okay, it's like
Sorry.
left my mind that quickly. Um, Wave is, yeah, it's a free bookkeeping software that you can have on your phone and on your laptop and so forth. It is a good software. It's free. It's strong. It's not as strong as some other bookkeeping systems that you pay for, but if it seems like it's meeting your needs, then absolutely, that is one of my recommendations that I do make to people is to use Wave because it is free. Good job.
Okay, great. Thanks.
You're
What about
welcome.
food? Like if you're going out to eat with somebody, you're going to a concert, like I said, in my field, like I'm going out to shows, I'm networking with people constantly. How do you track and ex those as expenses? And do you?
Okay, and then so I'll make this the last question so I can move on to
Thank
another
you.
one. So there's and the law could very well change here, with the new president coming in and such. But Trump was actually the one that instituted this rule the first time around, so it's probably going to stay. Is you have meals and entertainment expense. So entertainment, if I remember correctly, entertainment is not deductible. So if you take me to a concert, the concert tickets are not going to be deductible, even though it's business related. But the food, as long as the food is separate from the concert tickets, the food can be deductible, and it'd be 50% of that. So you'd still record in your bookkeeping system the receipt, which is 100% of the food. And but then when your accountant does your taxes, they're only going to take 50% of that. So if you're going on a business related trip, then that can be deductible, the meals part of it. Now, if you and I are just friends hanging out, okay, no, there's no deduction there. It's going to have to be business related, okay? Good questions. Those are really good questions.
Thank you.
You're welcome. And I don't mean to cut you off, but I do want to try to hit up other people here. So Teresa is in chat saying, I have wholesale customers that I do not charge sales tax because they resell the product. Do I need a new 1220 form? I'm assuming that's a sales tax exemption form. I just don't have the numbers memorized in my head. Every year for the same wholesale clients? No, there's no requirement that you need that, although it is suggested that you have them do it every year in case something with your customer changes and maybe they added or changed the type of business that they are. And so maybe some stuff is taxable, some stuff isn't taxable. It's actually on you as the seller to know what they're buying and what they're using it for, to a point, to know if it's sales taxable or not. Let me give you an example. I helped a client not too long ago who was, I think they're in the landscaping business. And I'm thinking that when they bought stuff, kind of like that contractor, when they bought stuff, they had to pay the sales tax to their supplier instead of charging the customer. They submitted a sales tax exemption form to their supplier, and the supplier didn't charge them sales tax. The supplier got audited. The supplier said, "You know what kind of business this is. You should have known that they're supposed to pay you sales tax when they buy this stuff." And they put the supplier on the hook for the sales tax. Okay, so it came back to the seller, which I mean, I never helped someone with that before, so it's that was interesting to learn that. Now the supplier, because it was a large dollar amount, they went to the buyer, okay, and they said, "Hey, this is what happened." And you gave me this sales tax exemption form, so I was kind of trusting you. We want you to pay the sales tax back to us. The customer, the buyer, was like, "No, I'm not paying this back. Sounds like it was ultimately your fault. We did what we thought was right. We didn't like really try to, fool you." Ultimately, what they did decide on was they split it. Okay, the buyer did pay half of that sales tax. The seller paid the other half. I mean, because it was ultimately on the seller anyhow. That's who the government was coming after. But they did do that. They did, in order to try to keep a relationship there so that they could continue working together. They did it half and half. So good question. You should do it every year. That is Pennsylvania's recommendation, is you should do it every year, but it's not required. Okay, next one. I sell online to schools and churches. What form should they be supplying to me in order to be given a tax exemption? Isn't every state different? Is an EIN number sufficient? EIN number is definitely not sufficient. Okay. They got to give you the sales tax exemption form. And so, without looking it up, I'm going to say that anyone buying from you from anywhere in the country would have to get the Pennsylvania sales tax exemption form and fill it out and submit to you because you're located in Pennsylvania. And so I think it's in the chat here. It's probably that form 1220 that we're talking about. Somewhere else I saw it in the chat too from earlier on. But if you even just do a search for Pennsylvania sales tax exemption form, it should come up as a PDF document. If you can't find it, and with all of these things, again, reach out to your local SBDC consultant because we're just like touching a little bit of what you're thinking about and talking about. And so your local SBDC consultant should be able to, go deeper with you. And if they can't go deeper with you, they may have someone in their office with accounting experience that can go deeper with you. And if not, then many of them end up referring you to me, okay, or to the few of us that do have a lot of accounting experience. They'll refer you to us to talk to them. Let me see here. We're running out of time. I'm going to get one more question. I do apologize if I didn't get them all. Okay, gonna go with this one here. What is taxable to the company and employee when an S Corp employee has vehicle fringe benefits and S paid health insurance? Woo, okay. That one could take probably a whole page to write out. What is taxable to the company and employee when the S Corp employee has a vehicle fringe benefit? So going by just that little bit that I'm reading there, if I'm understanding it correctly, the company is offering a vehicle fringe benefit. They're giving money to the employee. So that's an expense for the company because they're giving money to the employee. And then the question is this vehicle fringe benefit, is it taxable to the employee? If I remember correctly, the way the black and white of the rule works is the employee is supposed to be able to, if it's set up correctly, then it would not be taxable to the employee. However, if that fringe benefit is more than what their vehicle expense is, then it could become taxable to the employee. And I say that because you might be thinking, oh, well, I'm going to give my employee $1,000 a week so that it's not taxable to my employee as a vehicle benefit. But if they're really not traveling that much and they're not expensive, and they're not able to account for $1,000 worth of vehicle expenses in a week, then there has to be an amount that's going to become taxable. And if they get audited, I promise you it's going to become taxable. The best way to do that, I feel, with vehicle expenses, if they're using their own vehicle, is mileage reimbursement. They have to fill out a form and submit it to you, the employer, and then they get reimbursed the mileage rate, the IRS mileage rate. They get reimbursed for that mileage. Okay. And if you need a form, if you're going to go that direction and you need a form that's already laid out to fill out for mileage to be reimbursed, the SBDC, we have to do it for our work because we travel a lot for work. So I'm more than glad to share that form with you. And then it's an Excel document that can be used over and over and over again. It's really cool. I share it with a lot of people. Now, S Corp paid health insurance. Well, if it's health insurance paid to an employee, then yes, it's an expense there. And if you have it set up properly as a benefit for your employee, then it's not taxable to your employee. Okay, but it has to be set up properly through the insurance company, okay, to make sure that it's not taxable to your employee. Now, if you're talking about an employee as in a shareholder of the company, that's a whole different story we're not going to get into, but shareholders are treated differently for a lot of things for an S corporation versus their other employees. Okay, so I hope that some of you learned a lot of information today, even if you didn't have a chance to ask a question. Hopefully some of what we talked about was intriguing to you. Be sure to reach out to your local SBDC consultant for more information on anything that we talked about and for any of these other questions that you have. And if they can't answer your question, tell them about Tax Talk with Corry and say, hey, can I reach out to Corry at his SBDC? And they'll say, absolutely, please do. They'll probably make the referral to me so that I can get connected with you. And then also Tax Talk with Corry happens once a month. We don't have the dates yet, but I think it's like the third Wednesday is what we aim for. But please understand that it does get changed from time to time because of other work-related things that I have to go to that I can't work around. Or if I'm on vacation or something like that, then I have to work around those dates. But if you kind of put it in the back of your head, third Wednesday of the month normally is when it is. The link that you use to get into here works for all of these future, should still work for all of the future Tax Talks with Corry's. But also, if you just watch your email, you'll probably see, however you found out about this one, you'll find out about our future ones coming up as well. So for all of you, happy holidays. I hope you have a great New Year's. Please be safe out there. No drinking and driving, and Merry Christmas. Take care, everyone. Bye.